Hello and welcome to NDTV Profit. You're joining us on this special conversation on the eve of actually HDB Financial coming out with this IPO. The IPO is going to open on the 25th of June and going to last till 27th of June. It's a 12,500 crore IPO with about 2,500 crore of fresh issuances and about 10,000 crore of an offer for sale by the promoter HDFC Bank. I have with me Mr. G. Ramesh, the MD and CEO of HDB Financial. Mr. Ramesh, welcome to this conversation. I want to start with the idea of the IPO. Conversations around HDB Financial's IPO have been going on for a very long time. In the middle, you had the COVID pandemic, and obviously things got a little, timelines got a little stretched. But if this RBI September 2025 deadline wasn't around, would you have considered a similar timeline for a listing?
So we are a large retail financial services company. We only do retail lending. As you may know, our largest 20 customers account for less than 0.4% of our AUM. So we are a truly retail finance company. It's a large and fast-growing customer franchise. We have close to 19 million customers since we started business. The book is well seasoned. Given that we are a retail finance company, we've been through cycles and demonstrated a successful track record. We believe that for a finance company like of the business that we are in, this is the right time to do an IPO. We have been able to demonstrate consistent growth through cycles, which shows that our business model is resilient.
This is one of the largest NBFC IPOs that we've seen in recent years. I think the last one was from the Bajaj stable, the housing finance company there. But for HDB Financial coming out into the public and now finally getting listed, you'll be going after now quarterly numbers, which investors will be closely tracking, and then obviously everything that happens will have an impact. How are you seeing this entire journey now going ahead?
So we, again, 17-year-old company, a great growth track record, great profit track record. Our customer base grew 2x in the last 3 years. In FY22, we had about 9 million customers, going to about 19 million customers. For us, we believe that the IPO itself is a milestone in the journey for us as an organization. We are built for scale, we are built to last, and our risk management processes and the way we think as an organization is that we are here for the long term. As you may know, we are part of the HDFC group and HDFC Bank family. We have no promoter. So when we think about the organization, we want to leave a great asset for the next generation of professional managers who come in. Yeah. And that's how we think about the organization in the future.
I want to ask you this question about the current business environment. Now, you're in asset finance, which is a significant chunk of your business. You've got consumer finance at 20% odd, and then other MSME financing for the rest of the there's 3 broad categories, right? But specifically, what is going to drive the growth going ahead? Because I know you can't give too much of forward guidance, but is there a preferred sector that you want to grow in?
Right. So as an organization, we are in 3 large verticals, as we call them. These are the way we originate the business. So we have this business called enterprise lending, where we give loans to businesses, what we call the classical neighborhood lending. Yeah. The second business is asset finance, where we give loans for purchase of commercial vehicles, construction equipment, and tractors. And the third business is consumer finance. We have presence today in over 1,100 cities. 71% of our distribution is in Tier 4 and city and beyond, which is city number 101 by census population. Yeah. So that's the scale and breadth of our distribution that we have. 19 million customers. So what we're really looking at is granular growth. So we have no geographic concentration, no product concentration, no customer concentration. We serve a part of India that we call aspirational India, which we believe will continue to grow in the years to come. So as India grows, we expect the aspirational India to grow. So we don't think growth is a constraint. I think what we really are focusing on building the right metrics and the right tools and the right technology and the right capability to deliver growth.
One expectation from an HDFC group entity is that you, like in all other businesses within the group, you want to be at the forefront of any sector that you're active in, right? In the NBFC space, you've got competition from the MSME-focused NBFCs, and then there's consumer financing, NBFCs, which is a heavily competitive sort of space. At 1 lakh crore of book, you're among the top 5 or so companies that's there in the system. How do you intend to then be, say, number one? Is there a pathway that you have internally to reach that?
So as a company, we didn't set out as a product company and then diversify later. Our journey through the years has been that we said we will work with aspirational India. This is a segment that's underserved, underbanked. They live all over the country, unlike the affluents or mass affluents who are concentrated in a few urban clusters. So they live all over the country. So product development thought process being that what is it that our customer will need through their life cycle, whether it's business requirements or personal consumption requirements, and how do we fulfill that capability? So what we've done over the years is build capabilities. We have good understanding of micro markets. Unlike some of the other product categories or other customer categories, this is a fairly heterogeneous market, which means that just because we're in market number 4 and 5 doesn't mean we have understanding of 7 and 8. That knowledge has to be built. Right. So what we have is a deep market understanding with a layer of technology and analytics that helps us focus on growth. And that's how we think about growth, much less about market share. At this point and at this stage where India is, we believe that building the market and creating the market is a real opportunity that we can pursue.
So that brings in newer customers. And
that's right. That's
okay.
right.
Because then the next logical question is the risk profile of this part of India, which is not in the affluent and mass affluent space, right? There is a general understanding in the market that there are people who are active in the MSME and consumer financing business should be okay with a 2% sort of NPA number. Having said that, the larger ones are not even close to that number. How would you explain your NPA profile and outlook-wise? Is there a goal that you want to reach or want to maintain for your business?
So each product that we do has a different risk profile by the way the product is consumed and the way the product is delivered. In some product categories, we'll have new to credit customers. In some product categories that we do, because of the size of the exposure, we would expect customers to have some credit history before we give them fresh credit. So for us, given the diversity of our business, we really follow a portfolio approach. We don't have a set target for NPA, but it's really the portfolio mix that should deliver a reasonable risk-adjusted return to our investors and shareholders. That's how we think about it.
There is a view about HDB Financial. This is a headline I used once, mini-me for HDFC Bank. This view that HDB works in areas where HDFC Bank cannot enter on its own because its risk sort of metrics don't allow it to enter that space. Is this a badge you hold with honor, or do you think that maybe there's a different view that people need to take?
So what we have had, and because HDFC Bank incubated this company, is the benefit of patient capital, right? Some very strong governance practices, risk management practices, and the mindset that this business is about risk management. And so what we have done really is built a company. We don't get any leads from HDFC Bank. Not a single lead. So the 19 million customers are all originated by HDB Financial Services. There are no people on deputation. Our technology stack is independent. Our infrastructure is independent. We have about 1770 branches. These are not in HDFC Bank. These are independent branches of HDB Financial Services. So have we learned great stuff from HDFC Bank? Yes. But we are distinctly chasing a different set of customers, and we're building products and services that meet the expectation of that customer group. So what we've been able to do really over the years is hyper-personalized delivery at scale using our distribution and technology.
Okay. Going ahead, again, I'm not asking you for specific growth numbers or anything of that nature, but is there a number, broad sort of target that you want to hit in, say, 5 years? Now we're in 2025 and you're coming in the middle of 2025.
Right.
Is there a target-wise number by 2030 June that you want to be, say, a 5 lakh crore company or even higher? So
last time we raised capital was in 2017 when our balance sheet size was about 1/3 its current size. So take out the 2 COVID years, we've grown about 3 times. In the last so many years, we are coming again to the capital markets for augmenting our Tier 1 capital. So that's a pace that we have kept. We believe that the opportunity exists and we should capitalize on the opportunity.
Okay, fair enough. You're not giving me a number then. Fair enough. I want to ask you one last question, and this is broadly on the pricing strategy of this IPO, right? 700 to 740 rupees.
Right.
Do you believe that this leaves enough on the table for an investor a retail investor to come in and look at it? Because at the end of the day, that's the base that we are unfamiliar with, but we're also sort of familiar with what they want.
Right. So we've been working with investors in the last few months on road shows. I think this price broadly reflects the value that we think that the enterprise should create over the next few years. It's a long-term game. We're not here. We are a 17-year-old vintage, which means that we have built value over a period of time, and we'll continue to do that.